Let's get to those top picks. Microsoft.
Yeah. So look, Microsoft peaked out at $54 in 1999. Finally broke out from that high in 2016. In 1999, they earned 70 cents a share. This past year, they earned $3.43 a share, but was trading at the same price. Microsoft is rejuvenated through its cloud-based business. They reported great earnings tonight. Their cloud business grew 98% after growing 90% last quarter. Their gross margin widened again, becoming more profitable. Their earnings were up 15%. I promised people a company that would pay them a nice yield. It's a 2% yielder, but they're growing their dividend at greater than 15% a year. That should continue for quite some time. Subscription software sales were up 40% year over year. This is a big company. It has connections to almost every major enterprise in the world. Business is getting better. They're going to continue to grow.
Charles Schwab.
So we really like financials. We talked about banks. We talked about asset managers. We talked Charles Schwab, obviously the discount broker. This is a play on a resurgent private client investor. Their new assets last year grew 58%. 40% of their earnings come from a net interest margin, the money they make holding cash for their clients.
So they're a clear
winner from rising rates. 40% from asset management. As client assets grow, their fees grow. As new money comes in, their fees grow. They were the first to start a big robo-advisor in the U.S. They're garnering significant assets. They've got a big ETF business. This is a growth company that benefits in a number of different ways. I like this company a lot. It's like kind of the Amazon of wealth management.
And finally, United Rentals, presumably an economic play.
Right. This is a play on the U.S. economy. Companies do not like to buy heavy equipment any longer. They like to rent it. It's much more efficient. It always runs. They always have the right job. When the economy gets better, their capacity tightens up and prices go up. So they're now seeing rising prices for their rentals for the first time in a few years. When that begins, it tends to go on for a long time. So it is a cyclical business, but if we think companies who are much more optimistic than they were 18 months ago are going to look to build, they're going to use equipment from United Rentals. They have, 980 different centers around the U.S. They're in 49 states. This is a company that can grow very nicely, and it generates a lot of cash. If prices go up, it becomes much more profitable.
I was once at Stevenson's, the rental people. I wanted to borrow something for digging in the garden or something. And I said, well, can I have the big one? And the young guy said, that's a bit extreme. He thought
looked like fun, though, I bet.
I might have been out of my depth with that one. Anyway, great having you on the show, David. Thanks very much.
Thanks very much for having me.
David Burrows has been our guest on Market Call tonight. Thank you very much indeed for watching, and we'll be back tomorrow.